Happy Friday, traders. This is Fawad Razakzada, market analyst for City Index. Today is the 13th of June. So the markets remain in an overall risk-off tone, and this is helping to keep gold prices supported following the weekend attacks on Iran by Israel. Now, retaliation from Iran is imminent, and that's keeping investors on their toes, and this is helping to keep gold supported amid haven flows. The precious metal has broken out of this formation, a triangle pattern following the attacks, taking out resistance at 3,400, and now it is above the closing high of May the 7th at around 3,430. So at least on a daily closing basis, the precious metal is set to post a new record high. But can it also take out the high, the intraday high from April at 3,500? That's a key question. And judging by how price is behaving and everything that's going on at the moment, I wouldn't bet against it. And so the path of least resistance on the precious metal remains to the upside. Key levels of support to watch, meanwhile, are the levels that I've just discussed, namely at 3,430, the initial level of support. Below that, the breakout area at around 3,400 is the next key support area to watch. Crude oil prices have come off their earlier highs following a big rally overnight following the news of the attacks. But prices remain positive on the day, up around 5% at the time of recording. There's a possibility that Iran could strike Israel at the weekend. So there's a possibility that we could potentially see crude oil prices gap in either direction. Really, it really depends on the severity of the potential attacks. It could happen anytime. It could happen next week. We don't know that, obviously. So there is that weekend risk, which means that before the markets are closed today, make sure to limit your risk exposure and take necessary steps to avoid the market going against you at the open next week. So key levels to watch on crude oil. 70 is an important level on WTI because it's a psychologically important round handle. For as long as it remains above that area, the path of least resistance remains to the upside following the formation of this double bottom pattern and the eventual breakout above this trend line. Now, we've seen a bit of a recovery in the US dollar because of the spike in oil prices. Now, remember, the US is a oil exporter, and whenever oil prices rise, it tends to benefit the US dollar, not just because of crude oil link, but also because of haven flows. But the Japanese yen is another haven currency, and that could be one to watch against the US dollar, because if the US dollar resumes its downward trend, it's the Japanese yen that could benefit the most given the risk-off mode in the markets. And right now it is at a very important resistance area. As I zoom in, you will see this area more cleanly. As you can see, 144.40-ish was support earlier this week before we broke below it sharply yesterday. Now it's being retested from underneath. So there is a risk that the dollar yen could resume lower from here. And if it closes below this bullish trend line, that would be very important, because then we could potentially be talking about low 140s, possibly below that in the weeks ahead. For now, support in this grey shaded area that I had highlighted from before held earlier today, and we bounced from there. But another retest of this level could potentially lead to a more significant drop. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.